The majority of experts believe that the Chinese housing bubble is the real thing. Now, the important thing to think of is how will this affect the United States and the rest of the world if in fact this is a major housing bubble. Exactly when the bubble will burst and what its impact is. In previous experiences with real estate bubbles such as this one, an example would be the United States real estate bubble. It can take at least 2 years from the time people start talking about a bubble bursting and the actual pop. The United States was heading towards a real estate bubble, but the bursting of the bubble didn't begin until 2006 with the collapse of subprime lenders. It took a while to ramp up to that bubble bursting. Let's say that China's real estate bubble does burst in the next year or two. What could happen to China's economy? Of course, the people who invested in that property could be wiped out, especially if they borrowed money to purchase it and could not sell the property at a price that exceeded the loan principal amount. And China's banks would then take big write-offs of the unpaid real estate loans. And I can tell you for certainty that the majority of Chinese that are buying homes are getting, if not all, a large portion of the 40 to 60% down payment from bank loans. China's real estate industry does differ a little bit from the United States as far as the securitization of mortgages. China does not follow that practice. Therefore, the impact of a bursting Chinese real estate bubble would likely be more muted than the United States real estate bubble. But still, if people who borrowed money couldn't pay it back, China might need to scramble to raise cash to keep its banks above water. In that case, it might need to sell a chunk of its $2.2 trillion U.S. debt, which would likely drive up interest rates in the United States. Such selling would massively increase the supply of U.S. debt in the market, at the same time that China's demand for it would be evaporating. With a $12 trillion deficit and climbing, such higher interest rates could lead to the U.S. into another round of economic contraction as a greater portion of GDP goes to paying higher interest payments on the debt. We can see this happening as it is anyway. How much this might cost and how bad the ensuing contraction might be is hard to quantify, but whatever the details, there seems little doubt in my mind that the bursting of the Chinese real estate bubble could have a nasty effect on the United States economy and the world at large.